Fin as well, Poonawalla FinCorp, and continue to remain invested in Bajaj Finance. Gurmeet, request you to hang on. The metal stock, it's been catching everyone's attention, so let's focus on that. This after China's reopening, well, it's been a big driver for steel companies. JP Morgan, they came out with the note. They said that the demand environment is good. It's expected to improve post the Chinese New Year, and also price hikes are likely to come about in the next few months. To discuss the price and demand situation on the ground, we're joined by Mr. R.K. Goyal, the MD at Kalyani Steel. Good morning, Mr. Goyal. Thanks so much for joining in. And first time we're speaking in 2023, so, wishing you a good year ahead. Well, sir, let's take stock first in terms of pricing. For a company like you all basically cater to the auto industry, and you all fix prices on a quarterly basis. So my question to you on pricing is, what was the change in pricing, in quarter 3 in comparison to quarter 2? Have you got that revision? And now I'm guessing you will be trying to push through a price hike. So you'll be in discussion with the OEMs. Give us a couple of details out there.
Yeah, good morning. We had a price decrease of around 4,750 in Q2 as compared to Q1. Where in the Q1 we did get some hike, but it was much lower as compared to the cost increase. In Q3, there was a demand from the industry for price decrease, even though we were under tremendous pressure of cost increase as well as cost increase due to devaluation of the rupee. They are still demanding that. At the same time, costs are continuously increasing. You are aware that coking coal prices have gone up, iron ore prices have gone up, and with China opening, prices of all other raw materials will go up. Now, there is another which is less talked is the cost of ferroalloys. The cost of nickel has gone up substantially, moly has gone up, and same is for the ferrochrome. Coupled with the depreciation of rupee, there is a tremendous pressure of cost, and at the same time, OEs have a thinking that we should reduce the price. So we are in a very tough situation currently, and it definitely has a big impact on our realization.
Right. Mr. Goyal, we are taking the cost pressures on board, and the weaker rupee as well is hurting you a little bit. But give us a few numbers. Quarter 1, there was a bit of a price increase. Quarter 2, there was a pullback of around 4,700 rupees. Quarter 3, there was a demand for price decrease. But what was it? What is the the conclusion ultimately? What is your demand? What have you got? Or are you still in discussions for quarter 3? And what is the outlook for quarter 4?
Actually, we are still in discussions for quarter 3. As far as we are concerned, there is no question of giving any price decrease. As such, we are under tremendous pressure. And Q4, again, we would like to have a price increase. And we have already requested some of the OEs for a price increase. Let's see where we settle. Quarter 3 is unsettled. Q4, we need price increase. And we are still in discussions with the OEs.
Okay, this is important, Mr. Goyal. You're saying that there's a big impact that you're expecting on realizations. It's a very tough situation currently. So since you're looking for a price increase, can you give us any indication of how much is the price increase that you can pass on?
Actually, our cost increase is around 6,000 rupees per metric ton. Now, we are looking for at least for this 6,000 rupees. And that's what we would like OEs to compensate. Now, this 6,000 rupees is basically the cost increase on account of direct raw material price. But look at the way overall cost structure has gone up. In the process, the working capital requirement has gone up by almost 80 to 100% in last 1 year, 1.5 years, coupled with the 3 to 4% increase in interest rates. So this has also impacted us substantially by way of financial cost on our working capital. One is the amount.
Sure, this 6,000 rupees you're asking for, or you're hoping that the OEMs will compensate, but this is at a time when the OEMs themselves have so many rising costs, right? Whether it's regulatory costs, whether it's new safety norms, emission norms will be kicking in from April. Do you think you will get this kind of compensation? And if not, what would the impact be on your margins, which in any case have now dwindled to about 10%?
You are absolutely right. You see, on one hand, our costs have gone up, so we have to demand for it. And at the same time, what you are saying is correct. That's the situation of the auto industry. But whatever cost increase, we would like to get it. And if it is not, if we do not get it, then definitely there is a big impact on our profitability.
Okay, all right. Mr. Goyal, for quarter 3, what could be the best and the worst case outcome? Will you be happy if you at least go away with no price change after the 4,700 rupees price cut in quarter 2?
You see, what we are expecting a rollover. That means no decrease, no change.
No decrease. Got it.
Yeah.
All right. Quick word on demand. Demand strong, right? You're functioning at optimum utilization levels. You're continuing at that?
Yes, we are definitely doing that. And now we have for avenues to export so that we can still hope for better realization.
Okay. And export is how much of your mix as of now? It's very small, right?
As of now, it is negligible, but now we have started trying. We were not trying because our capacity is fully booked from the domestic market, which is still. But then to improve our realization, maybe we have to look at this option also.
Okay. Can you tell us a little bit about the PLI scheme? What is the capex that what is the amount that you will be investing, and how much will this take your capacity to?
You see, as far as the PLI scheme is concerned, 2 of our products are approved for PLI, and in total, minimum investment required is around 210 crore. And we have to increase production of these products by 80,000 tons each. And the growth in sales has to be minimum 15% year on year. So I'm pretty hopeful we may achieve, but it's a tough call.
All right, Mr. Goyal, so you'll be putting 200 crores, 80,000 tons in, and I think you're approved in 2 categories, alloy steel for bearing steel as well as for automotive powertrain steel as well. You said 15% revenue growth, but on what? You'll be putting 200 crores. What is the minimum revenue first you have to deliver?
You see, from the baseline, in each of the product category, 15% incremental sales.
Yes.
Incremental. So that is what is the requirement. And in each of the category, we have to invest minimum 105 crore.
Okay, 105 crore. All right. And by when will these revenues start reflecting? Which year?
It will take time because all this investment, by the time it start yielding result, will take around 2 years.
Okay, so it's still some distance away, and I'm guessing that this entire capex will be funded easily via your own balance, because I think you're sitting on a net cash of close to around 500 crores.
More than that.
How much is it?
It is more than that, yeah.
Approximately, sir, how much? Net cash in your books?
Free cash of more than 900 crore.
All right, I think that's the gross number, but we'll take that point on board. Maybe post your numbers. We'll have a better chat on that front. Thanks so much for joining in, Mr. Goyal, and giving us those details. Well, Gurmeet Chadda has been waiting by as well. Gurmeet, you heard that